Welcome to Tenacity with Sonia C, the podcast where entrepreneurs, founders, and ambitious professionals come to learn from those who have walked the path, navigating challenges and achieving success. Whether it's thriving in business, pivoting, scaling for growth, fundraising, or finding work-life balance, dealing with loneliness, adversity, or overcoming personal struggles. Our guests share the insights and strategies that have empowered them to level up. I'm your host, Sonia, and let's get started. My guest today is Alexander Harmsen, a tech entrepreneur with a passion for AI, finance, and autonomy. He's the founder of PortfolioPilot.com, an AI-powered financial advisor with over $30 billion in assets on the platform, helping individuals make smarter investment decisions without human bias. Before this, he founded and sold Iris Automation, contributed to NASA's Mars helicopter mission, and went through Y Combinator, raising over $30 million in venture capital along the way. In this episode, we dive into the future of AI and finance, what it really takes to scale deep tech startups, how to pitch AI-first companies to investors, and the psychological traps that trip up even with the smartest investors. Hi, Alexander. Welcome to the show. How are you today?
I'm doing really well. Thanks for having me on, Sonia.
Yeah, of course. I always love having tech people on because I'm in tech. Not that the whole show is about tech, but whenever there's tech, I get really excited. The nerd in me just comes out.
I'm sure we'll have a great discussion.
Yeah. So let's get right into it. You've built and exited a deep tech company, worked with NASA, and now launched PortfolioPilot. What connects these big leaps in your career?
Yeah, I think so. And even before that, if we go back to college, I did engineering, physics, and economics. And, part of it is maybe me just like not being able to choose and nail down like one specific specialty. But I think the thing that connects all of them is that it's all about complex systems. It's all about modeling. There's something about having sort of a deep understanding of how like behavior and these kinds of interconnected systems work that end up being very useful for deep tech in particular, figuring out finance, figuring out biotech, figuring out autonomous vehicles, robotics. And so I worked at NASA for a little while, worked on the Mars helicopter. And so basically
That's cool.
this is like early 2010s, and it was a 10-year project where we said like we want to take a little drone and put it on the Martian surface and see if it can fly, because the Mars rover itself is incredible, super high tech, but it's super slow, and it doesn't really allow us to explore much of the Martian surface. And so if we had a little drone with it, then maybe we could have this sort of reconnaissance missions and explore more of the surface. And there was a few technical problems there to solve. One of them is just like the atmosphere is so dense, but the gravity is a lot lower, so you can probably just spin faster. The biggest problem that our team was solving was without a GPS system, how do you position yourself on the surface relative to rocks, and sand? And so we had these like very cutting edge computer vision systems that we were working on that could basically tell the difference between two rocks and build a map of the surface as it went along to do positioning and know whether it was, if the difference between being 10 feet and 1 feet and 100 feet off the surface is really important. You cannot crash, right? As soon as you crash, the mission is over. You can't just have some NASA scientists walk over like in our testing field and snap a new rotor on the little drone.
Yeah.
And so, how does that translate to everything else I'm doing? Part of it was just like computer vision was actually where large language models that we use today and ChatGPT and everything else, that's really where it got started. And computer vision it's so much data, and that like you basically had these very, very early on expert systems, neural nets, And then, we were using very early neural nets, and then neural nets turned into deep learning, and then deep learning eventually turned into large language models and ChatGPT and Claude and everything we see, that drives AI today.
Mm-hmm.
And so uh, that computer vision expertise and what I learned there, it felt obvious to me that that would be applied to commercial drones and air taxis and robotics. And it feels very obvious now that like white collar jobs are really the first,
Yeah.
big wave of AI takeover. But I think even 10 years ago in 2015, when I started my previous company, it felt like robotics was like where AI was really going to emerge and do things. And so my previous company, Iris Automation, basically built these very robust computer vision systems to let drones see the world the way pilots do. And we were very focused on agricultural surveys, mining exploration, pipeline inspections, like large surveys, package delivery, cargo delivery using air taxis, not military stuff, and not really sort of like photography drones. If
Mm-hmm.
you wanted to fly more than 1 mile away from an operator, you needed to work with us. And it took us 5 years before we actually got the first bit of revenue in the company. And so, deep tech doesn't even begin to,
Yeah.
describe it. It was a significant amount of investment up front. I definitely needed to bring investors along for this like very long-term vision. But then once we got regulatory approvals, once we actually built the tech, then we basically had this regulated monopoly where like we just didn't have any competitors anywhere close to us in the space. And
Mm-hmm.
that got us an incredible acquisition offer from a big partner of ours. And basically in 2021, I found myself without a job. It was the first time that I had any sort of real liquidity. We bought a house in the Bay Area. I, had gotten married by that point. We started a family. We have two very cute, toddlers now, two boys. And my wife runs a company as well. And so I did some technical advising for her company. That was super interesting. That feels like a completely different space, but it was
Mm.
biotech. And
Okay.
so her company, Very Sim Life, has basically built a model of the human body that they use for drug development. And so they
Mm-hmm.
can predict whether a drug can get FDA approval before it goes into its first mouse. And so they basically
Nice.
model out, you know, blood streams and distribution mechanisms and absorption and metabolizing pathways within the human body to estimate toxicity and efficacy and elimination of drugs within the human body to target certain diseases. And in some
Mm-hmm.
ways, like completely different than what I was working on before. In some ways, very similar, right? It's
Yeah.
complex systems. How do you think about making the right assumptions? How do you test something like this at scale? How do you make it robust? How do you deal with regulators? And then, I was talking to financial advisors and planners and wealth managers, and I couldn't stomach the 1% fee. And
Well, that's
so
going to lead me to my next question. What was the moment you realized the traditional approach to personal finance was broken and that AI could offer a better solution?
basically just trying to solve a problem for myself. Right? I think
What was the problem?
at some point I got onto some list or something because every single day I had financial planners and advisors and wealth
I've had
managers
that.
and you know private banker, blah blah blah. They're basically all salespeople, right?
Mm-hmm.
They portray themselves as experts, and definitely they know more about this specific set of rule and this tax optimization opportunity and asset allocation, this and that. They know more about that than I do. They used to. I like to think I'm an expert at this point, but. I mean, they could always point out some optimization opportunity on the first call, but I feel like as I dug in, it was all fairly surface level. And the idea of paying 1% every single year to the salesperson who was basically just putting me into a standard fund with everybody else, I just couldn't stomach the idea of that.
Mm.
There's robo advisors, right? Betterment and Wealthfront and Fidelity and Schwab, but that also sort of felt like lowest common denominator investment advice. A bit of stocks and bonds, ETFs. I I liked to think that I was special and, my specific financial situation was different than everybody else's.
Mm-hmm.
And whether it is or not, I honestly don't really even think matters. In
Mm-hmm.
reality, everyone is different. Everyone
Yeah.
has some worldview, everyone has some different goal, a different financial situation, some combination of emergency fund and a job and a 401k or a 403 or an IRA or Roth stuff or different idea about the long-term plan. I'm going to retire at 65, 61, 67, different social security or pension benefits, different family situation, house, the state they live on. As you can imagine, like very quickly, it becomes very personalized, the kind of financial advice that you should be getting. And
Mm-hmm.
I couldn't find, like, short of starting a family office and like employing a lawyer and an investing guy, I couldn't get that personalized investing advice anywhere. And so I basically just
And
started
but what made
tinkering
you
with the
think that
solution for
AI could
myself.
offer a better solution?
I like even in 2025, and I started this in like 2021, sort of 2022, right after
Mm-hmm.
I sold my previous company. And I think now we talk about this AI financial advisor. When I started it, AI wasn't even that big of a deal, but I'd,
Mm-hmm.
I'd built autonomous vehicle systems. I'd seen what, you could do in the biotech world in terms of modeling the economy and, financial planning and investment advice. It didn't seem that complicated compared to modeling the human body. And
Mm-hmm.
so the idea that you could use AI or expert systems combined with sort of traditional portfolio management tools that you might see on Wall Street. And then, there's a bunch of parameters that you could put in yourself. You know, if you added 30 parameters instead of just your risk preference, you could probably get way more personalized, way more interesting financial advice.
Mm-hmm.
And so like that idea of sort of taking the complex
Yeah.
systems modeling, the idea that you could have not just full on AI, ask ChatGPT a question and get an answer, but proactive advice that has some real world portfolio management guardrails. It didn't seem crazy. And then I don't
Mm-hmm.
know if we're quite ready as society for AI to manage your money for you, but the idea that you could attach your financial life to this AI and it can find optimization opportunities proactively for you,
Mm-hmm.
sort of this always on financial companion.
Yeah.
That, like, I think once I got stuck with that idea, once that, came to me, suddenly it
Mm-hmm.
felt so obvious. And
Right.
if it's
Right. No, I
completely
agree.
automated, you don't need to charge 1% of someone's net worth to do that. You could charge, we charge $29 a month or $20 a month if you buy the annual plan. It's it's nothing. Like it
Mm-hmm.
should, like, ideally it pays for itself.
Yeah. So you have over 30 billion in assets on the platform. What has surprised you most about how people invest or how they think they invest?
Yeah, absolutely true. It, I mean, feels incredible, right? That's such a large number, um, tens of thousands of users. They're like, the surprising thing is that people truly do have everyone is personalized, everyone has like their own specific situation. And I think most of it just comes down to psychology, right? It's like all just about controlling fear and greed. A lot of people just want to feel a little bit more confident that they have, some system as a coach, just a little bit of reassurance I'm on the right track, or, calling out if you wanted to improve, you're like, for some people the system says like, hey, you're not in a good situation. Right? And
Mm-hmm.
for some people that's the kick in the pants they need to do something, contribute more, move their assets. I think a very surprising thing for people is that there's this idea of portfolio efficiency that I
Mm-hmm.
think a lot of people don't think about. You could be taking, say, a moderately aggressive amount of risk, and the expected return that you get for taking that risk can vary wildly.
Mm-hmm.
And so I think for a lot of people, they think like, okay, as long as they have a bit of money in stocks and a bit of money in bonds, then I'm good. But there's a lot of other asset classes to consider. If you think about, building a portfolio of uncorrelated assets
Mm-hmm.
that are all high expected returning, then like you can actually build a much more efficient portfolio, get a lot more expected returns. If you get 1% higher expected return every single year for the next 30 years, that ends
Yeah.
up being a huge difference in retirement.
Yeah. So your platform, correct me if I'm wrong, how it works is it's a financial advisor almost where you feed it your personal financial information and it guides you on what you can do better to grow your portfolio or your savings and things like that.
Yeah. You say almost, but it actually is a financial advisor. Like we're actually
Okay.
registered with the SEC as a
Mm-hmm.
fiduciary registered investment advisor. And so the system is actually allowed to give real personalized financial advice, and we're allowed to charge it for it. And
So,
that's fairly unique, actually.
yeah. So is that going to replace the human aspects of financial advising?
Uh, so in short, yes. I think
Okay.
the longer version of that is that for millennials in particular, they've
Mm-hmm.
already left behind human financial advisors.
Okay.
And so this isn't like the human financial advisor industry is something like $240 billion every year.
Mm-hmm.
Absolutely massive. But already, the Gen X, basically about 50% of people when they were 40 had a human financial advisor.
Mm-hmm.
Now, millennials, when they're 40, 30% have a financial advisor. And so there's already this massive generational shift away from human financial advisors to people doing it themselves. And
Yeah,
I think
for
part of
sure.
it is just like, there's so many tools and brokerages and crypto and
Yeah.
opportunities. And I think there's just a general distrust in institutions that people feel like I can do this myself. But what we found is that there's just like there's a big gap where people still feel like they need a coach or
Mm-hmm.
assurance, or for a lot of people, it's simply just a second opinion.
Great. Yeah, I totally understand. I mean, I'm an AI junkie. I use it for everything. So I do believe in the concept of using AI to sort of enhance what you're doing. So I could see it being very beneficial, especially because AI, like you said, it's a data collection. So it can take millions of different data points and give you advice on millions versus a human who might give you hundreds, right?
Exactly.
So it's already a little more
Without the human
advanced.
bias,
Yeah,
right?
yeah.
Truly thinking about like bring the idea of I think the big promise of AI is bringing expertise that is typically reserved for the people that can pay, hundreds of dollars per hour for the expert
Mm,
lawyer, the expert doctor, the expert financial, planner, and making that, wildly available to your specific situation.
right. Okay, well, you've raised 30 million in VC funding. What did fundraising teach you about pitching an AI first company versus a typical SaaS or fintech product?
Yeah, it's different, right? I've seen so my previous company was, robotics and computer vision and like no mention of revenue for a long time, right? The
Mm-hmm.
expectation was this is going to be 0, 0, 0, 0, and then suddenly
For a
shoot up
long time.
because we, solved the tech and we got the regulatory approvals, and now suddenly
Yeah.
everybody needs this thing and it unlocks the entire market. And then this time around, there was some initial version of that as well, where we needed to build the system, we needed to, register, we needed to get the approval to be able to operate as a registered investment advisor. And then my wife's company is kind of similar too, right? In biotech, there's a ton of upfront work for years and years. And so I think fundamentally you're pitching to a different kind of investor too.
Mm-hmm.
The questions around competition are much easier to answer, right?
Okay.
You know, the
Yeah.
idea that you might need to raise millions of dollars to even start competing with us, that's very useful. And so
Okay.
there's this general idea as well that, like, you know, I've leaned into that all the good ideas are gone. And
Yeah.
so, you know, it's only really the hard ideas that are left. And like the sort of Peter Thiel philosophy, like competition is for losers. You know, go into something that you really, really understand well and go deep on it, you know, where there's a large market, but it's very difficult to get there. And I
Mm.
think that's the kind of thing that VCs want to bet on. And I never really liked the idea of building some social app or something that's like
Yeah.
very easy to replicate, especially these days where I can just go into, you know, Lovable or
AI.
V0 and
Yeah.
like prototype something and launch it by the end of the weekend. That's
Yeah.
so scary that you could have an app completely replace, you know, what you're doing. And
Yeah.
so, like, I think first, before you even think about pitching, you have to answer that question, right? Like, why can't someone else do this thing that you're doing?
Yeah.
And then I think at the end of the day, a lot of the VCs are not really looking at your current product. You know, the fact that we only have a couple $100,000 of revenue doesn't really matter. I mean, in the
Mm-hmm.
early days, what's the difference between $10, $1,000, 100,000, you know, $1.5 million of revenue? Like they're going to bet on the fact that this could be a $1 billion revenue company.
Mm-hmm.
And everything else that's not, you know, a $1 billion revenue company is like feels like it's sort of just, you know, part of the bets that they're making that didn't really turn out. You know,
Mm-hmm.
there should be companies that pay for the entire fund. And so I think there's truly something about pitching the big vision and then also showing every single week, you know, how do you out execute potential competition? Because, you know, once you cross $10 million of revenue, you better believe there's going to be 5 startups, you know, or big companies that shift into the space that see like, okay, they
Yeah.
proved out that this is, you know, working. Let's copy what they're doing. And so how do you continuously stay ahead for 5 years? I think
Yeah.
it's all about execution. And so I think a lot of what VCs are trying to evaluate is like, can this person execute? And
Mm-hmm.
part of it means just moving really quickly, making quick decisions. You know, one of the things I emphasize in all of my investor meetings, no matter what, we ship a new version of the product every Monday evening, you know, religiously. You know, there's
Mm.
very little that would stop us from shipping a new version of the product every single Monday. We have a very tight cadence. We have a massive feedback machine that we've built with our clients.
Mm.
That's potentially our only advantage as a company. The fact that we can move
So
really quickly and iterate very quickly and respond to
yeah.
customers. And then I think part of it is just, you know, can you hire the right people? Can you raise future rounds of funding? Right? It's not that helpful if you're really good at seed, but then, you know, you can't convince a Series A fund to put
Yeah.
in the next $10 million. I mean, I think there's a very specific kind of path that
Mm-hmm.
you have to get on and commit yourself to if you raise VC money.
Yeah. Um, yeah, I mean, I get what you're saying. That's interesting. But you know, like I feel like you were just saying with your releases every Monday, it's a go-to. It's so is that your strategy for like just staying ahead of the competition, making sure that they're always behind you, and then of course your board sees that you are the main company doing this. Everyone's just trying to keep up with you, but they're gonna have to raise a way more money in order to keep up with you, right?
I think so. I was talking to another so yes, absolutely. I think there's two like really good examples that come to mind for me. But there's this company I was talking to recently that he's doing a massive launch and like he's really excited. He said like in July we're going to release a new version of the product.
Mm,
I was like,
okay.
I mean, that's really awesome. Like, what's the difference? He said for the last year, he's been working with his team on like upgrading stuff and fixing this, responsiveness issues and adding a bunch of new features.
Yeah.
And they're going to do this big release, and now it's like it's delayed by a month or two.
Or three.
And it's truly a different mentality where like, look,
Yeah.
this week, we need to improve the product, and we're going to improve it like 5% this week.
Yeah.
There's just a list of things we commit to every Tuesday morning. We have an hour and a half meeting. We commit to a bunch of things, marketing and product wise, engineering. And then, the expectation is that it all gets done by Friday evening. If it doesn't get done by Friday, work through the weekend and get it done by Monday morning. But Monday morning it gets locked. We test it all, last minute iterations and fixes, and then Monday at midnight it gets released. And then the cycle starts again Tuesday morning. And like, there's something about that cadence that's extremely motivating for the entire team.
Yeah.
Every customer we interact with, they say, hey, this thing isn't working, or I wish I had this feature, or, this menu doesn't have this extra item, or whatever it is. And we decide if it's high enough priority, then it gets added to the next sprint. And within 10 days, it's released back to the customer, and they feel like, wow, this is actually like, I'm surprised that I mentioned
Yeah.
something, they fixed it. This is actually the kind of company that I could give more feedback to, and they can make this product experience even better. Like if
Yeah.
I foul a bug with Netflix, the idea that it gets fixed and they get back to me is like very low. And so I just don't
Yeah.
submit bugs to Netflix. I assume someone else is going to raise the bug and it will eventually get fixed. But we have like very active users that feel invested in the process with us, and we're helping to turn them, they've basically become
Yeah.
super users, and the feedback cycle just accelerates and accelerates and accelerates.
Yeah.
And so there's something there. And then I went through Y Combinator of my previous company in 2016. And one of the things they did was they brought, I think it was the Airbnb founders, they brought them in to talk to, the 100 of us startup founders. And I remember thinking, like, okay, I have basically an hour to listen to this guy. I got to figure out what's the difference between me and this person. Like,
Mm-hmm.
why did they successfully build $1 billion company that would stop me from doing that? And like, it would be kind of scary if the reason is because they're smarter than me or they look better than me. But if it's not some sort of inherent physical traits, then it's probably something I can adopt and figure out and train myself on. And like what I at the end of that hour, sort of like the follow-up questions, I think what I decided was that the only difference between me and this, like, one of the top founders, is that they're just moving a little bit faster and they're a little
Mm-hmm.
bit more focused every single day, and that just compounds over the course of 10 years.
Yeah.
And like there was just some like maniacal focus about like every single day, all I need to do is like the three most important things. And so if I
Right.
spend 10 minutes at the start of every day, decide what are the three most important things to do that day, and then just no matter what, get them done that day. I move the
Mm-hmm.
company forward, 1% every single day. And like surprisingly, very few other people do that. Like it's just,
I know.
I
Yeah, I
just
know
don't
what you
think
mean.
that
I've
that's a,
done the same thing. I've
yeah.
done the same thing in one of my startups where I'm just like, customer feedback is the most important thing. And then sometimes clients will call us and they're like, oh, somebody actually answered the phone. Oh, like you guys just did a release and I just complained about this last week. And they're like, I can't believe you actually did it. And there's something like people really appreciate that. Like when you go above and beyond just to fix a small problem for them, they're like, they feel like they're not just nobodies. Like this company really cares. And I think that really
Exactly.
builds, like it becomes part of your brand, right? Because your
Mhm.
customers really look up to you and appreciate it. But we're coming up on time. And so before we wrap up, I just want to ask you one last question. For founders who feel stuck or burnout, what mindset shift or practical advice would you offer from your own experience?
I think I think there's something relating to this idea that you need to both think about the long-term vision and really nail that. And then very practically every single day, write down the three most important things that get you closer to that vision. And it can be
Okay.
very simple stuff.
Mm-hmm.
You know, like I take my kids to daycare every single morning, my two toddlers, and then on the way back from daycare, I stop and get coffee, and it's sort of like 10 minutes altogether where all I'm thinking about, no Spotify in the car, just silence. I'm just thinking about like, okay, I want to get here, in 5 years. What's the biggest thing today that I can do to unlock that? And, today I decided, the single biggest thing is that like we don't really have a good feedback mechanism for a lot of the marketing stuff that we're putting out into the world. We put out videos and newsletters and, ads, and like I was thinking, we record the end results, but do we really have feedback on our newsletters and videos to show that's improving and getting better every single day? I don't think so. And so, we have a marketing meeting, today, and I emailed the marketing team and said, like, for an hour, all we're going to talk about is like the feedback mechanism for that. And I truly think if I think 5 years down the road, what's the biggest thing today that I could have done to affect, our success long term? That's one of the three things.
Yeah.
And I think by the end of today, we'll have a proper feedback mechanism. We'll decide on a North Star. It'll probably be something like watch through time on our like YouTube videos.
Yeah.
And if we just measure that every single day for the next couple months and run a bunch of different experiments, like I think that might be the difference between our marketing videos going viral and not consistently over time.
Yeah.
And, that's really important because customer acquisition right now is the big bottleneck to the company. And, it's very tangible, something we can set up and measure continuously from this point going forward. And like, I think if I didn't do that this morning in the car back from daycare, then probably our marketing meeting today would have been focused on, I don't know, what's the next newsletter that we're putting out next week? Like, what's the next iteration on our ads? How do we think about this competition that we're running? I don't like, would have been a bunch of tactical stuff that like,
Yeah.
even like the fact that we have this meeting today talking about that, I don't think it's going to mean that the other things don't get done.
Yeah.
We'll fit that in. Some of it will be like more async conversations. I think this week I'll just trust the marketing team a little bit more to just execute those things themselves without me having, giving feedback on it all. They're like I think the incremental, like the direction change by having that feedback mechanism is 1 or 2% compounded, over the next 1,000 days.
Yeah.
Such a huge difference that like I'm surprised that other people don't do that.
Yeah. Well, I mean, that's good advice. So hopefully people will take it. But Alexander, thank you so much for joining me today. I appreciate your time and all of the advice you've given.
I love that. Thank you for letting me chat a little bit.
Yeah, no
Sonia, thanks for
worries.
having me on.
Thank you. I want to thank Alexander for joining me today and sharing such an honest, insightful look into the world of AI, startups, and investing. What stood out was his clarity on how AI can remove human bias from financial decisions and the surprising patterns he sees across billions in assets. His journey from building Iris automation to launching PortfolioPilot is a masterclass in staying visionary while staying grounded. And his advice to founders, especially those in tough moments, to keep iterating and focus on the long game is something we all need to hear. And that's a wrap. To our listeners, thank you for joining me on this journey of learning, growth, and inspiration. Don't forget to subscribe to this podcast on your favorite platform and connect with our community on social media. I'd love to hear your feedback, so leave a review and let me know what topics you'd want to explore in future episodes. Remember, the future belongs to those who embrace challenges, adapt with tenacity, and keep pushing forward. Keep growing, keep pivoting, and most importantly, stay tenacious in your pursuits. Thank you for tuning in, and I look forward to bringing you more insightful conversations in our upcoming episodes. This is Sonia signing off, but as always, keep chasing your dreams with tenacity.